What's up guys, Dan Kohan here, and in this video I'm going to go over the best loan options for landlords and real estate investors. First off, special thanks to Rent Redi, rental management software, for partnering with me on this video. If you guys want an awesome rental management software that I use personally, go ahead and check out the link in the description below. Use my code for 20% off your subscription. Now let's get right into the video. The best loan options for real estate investors and landlords. First and foremost, it really depends on what stage you're in. If you have no properties yet and you're looking to get into rental real estate, by far the best option for you is going to be getting some kind of primary residence loan, getting a house or small multifamily, and house hacking in that property. The rate and term of that loan is going to be far superior to any kind of investment financing you're going to find. Typically on those, you're going to be able to get into a house. A house is going to be the cheapest financing in terms of interest rate and down payment. You know, small multifamily, you're looking at 30-year loan term and probably, somewhere around a 4% interest rate, but you could be getting into it for as little as 3.5% down, which is awesome. Now, beyond that, if you're at a stage like I'm at, where I've used all my primary residence loans, you're now going to have to use commercial or investment financing. The best forms of it are probably going to be through local banks in your area, as they are going to be, this is where you're going to start getting into relationship banking, which is great because the terms for investment banking and commercial banking are a lot looser than, like residential mortgages and things like that. And, how they, once you have that relationship, and you have a good relationship, they know who you are, they know, it's going to be far easier to qualify for loans. But there's drawbacks to that, biggest being is the rate and terms are worse than residential real estate. I would go ahead and call a bunch of banks. And again, with that, if you're getting, a quote from one bank that's comparable to a quote from another bank, there's no reason you can't take the quote from this bank and take it over to the other bank and say, hey, can you beat this rate? And quote, the rates are not as fixed, right? Because they have margin built into the bank above the government rate, and they can cut into those if they, want the loan bad enough, right? So other financing options are going to be like private money. If you can find a good private money lender, that's going to be extremely relationship based. They are out there. Typically their rate and terms, it's very variable because they really have their own underwriting, their own rate and terms. But they're going to be, you're probably going to get, it's typically, worse rates than the bank. But with that, you're going to get a lot more flexible underwriting because it's going to be very much more based on your relationship with that person rather than necessarily their underwriting department, because they're going to be underwriting all their own loans. And also with that, private money, it's not going to show up on your credit report and stuff like that. So it might not work against your DTI and so on and so forth. Now, a little bonus if you're trying to flip houses is, if you have to use hard money, then, not all hard money lenders are created equal, and I would shop them all to death because there's a ton of varying costs and closing costs and rate and terms and everything else, so make sure you're getting the best deal. With that, guys, make sure the people that you're working with are going to be good people to work with. Make sure they're responsive, that they know what they're doing. Other loan options for you guys are going to be lines of credit. Now, whether you're out acquiring properties, especially now trying to acquire stuff, really the only, because prices are so high, the only ways you're really able to negotiate is with offering cash and, lowering your closing time and then, like waiving inspections and things like that, right? And those are all great tactics, but to do that, you obviously have to have that cash, or if you have a relationship with a bank, or say you can get home equity line of credit or something, and you can get, cash in the eyes of the seller, you can use that to acquire more property. So if you get a line of credit based on your home's value, or potentially your real estate assets, if you have equity built up, you can get a line of credit instead of refinancing and use that cash to go and acquire more deals and put in cash offers on things. So I hope that was a lot of good value for you. If you enjoyed the video, go ahead and hit the like and the subscribe button down below. And guys, if you're looking for an awesome rental management software that's going to help you save time, screen your tenants, that I use personally, go ahead and check out Rent Redi in the description below. Use my code DAN20 for 20% off your Rent Redi subscription, and I will see you in the next chapter.